Zambia is treading new ground in Africa, becoming the first country in the continent to accept China's currency, the yuan, for mining taxes. A move that underscores Beijing's growing financial influence in Africa's critical resource industry. Zambia is the continent's second largest copper producer, and the nation's bank confirmed that mining tax payments in yuan began in October, marking a significant change in how Zambia manages revenue from its mining sector. And this move highlights China's key role in the wider Zambian economy. Beijing is both Zambia's largest copper buyer and one of its biggest creditors, and existing trade flows operate using China's currency.
A large portion of copper exports go to China, and Chinese mining firms already receive some, if not all, of their export payments in renminbi.
China is a push to internationalize the yuan, and Africa is becoming the testing ground. In October, Kenya converted part of its Chinese debts into yuan. The restructuring of a $5 billion railway loan is expected to save the country almost $280 million a year. Ethiopia has also begun talks with China to convert a $5.4 billion loan into yuan, again to ease the financial burden of repayments. African nations are continuing to turn towards China and also Russia for cooperation. The US has invested heavily in African infrastructure products in recent weeks and months, in a bid to challenge the growing influence of Moscow and Beijing in the continent.
Imagine a country in the heart of Africa quietly breaking the rules of global trade. Zambia, long tied to the United States dollar, is now ditching it entirely in favor of China's yuan. This isn't just a currency swap, it is a bold power move that could shake the dollar's dominance across the continent. The reason? The United States president's high tariffs and trade policies backfired, making dollar-based trade expensive and risky. Meanwhile, China steps in with loans, infrastructure, and incentives that Zambia and other African nations simply can't ignore. Could this be the start of a new era where the yuan replaces the dollar in Africa? Buckle up, because the economic and geopolitical ripples are about to hit and nobody saw it coming.
Imagine a country in the heart of Africa, rich in copper and mineral wealth, quietly making a move that rattles global markets. Zambia, long dependent on the United States dollar for international trade, has just announced a dramatic shift. It will now prioritize the Chinese yuan in its trade deals. This isn't just a currency swap, it's a geopolitical statement, a signal that Africa's economic alignments are shifting, and the ripple effects are already being felt around the world. For decades, the dollar dominated Zambia's exports and imports. Copper, one of the country's most valuable resources, was priced and sold almost exclusively in United States dollars. But now, Zambia is saying enough. By embracing the yuan, it is not only forging closer ties with China, but also gaining access to cheaper loans, trade incentives, and a more flexible financial relationship that the United States dollar simply cannot match. So why now? The answer lies in a complex web of global trade, tariffs, and strategic maneuvering. The United States president's aggressive trade policies, including steep tariffs on imports and strict trade enforcement measures, have inadvertently made dollar-based transactions more costly and cumbersome for nations like Zambia. As the dollar strengthened under tariff pressures, Zambia faced higher costs to buy goods from the United States and even more expensive debt servicing. China, on the other hand, saw an opening. With its Belt and Road Initiative already expanding across Africa, the Chinese government has been ready to offer alternative financial pathways. Loans in yuan, direct investment in mining infrastructure, and trade deals without the heavy burden of United States tariffs made shifting away from the dollar not just appealing but strategically smart. Zambia's mining sector, which accounts for a large portion of its national revenue, is at the center of this transformation. Copper and cobalt are crucial not only for global industry, but also for China's tech-driven growth. By invoicing in yuan, Zambia secures more predictable returns, reduces exchange rate risk, and strengthens a partnership that promises long-term investment in its infrastructure, energy, and transportation networks. In simple terms, this is a win-win for Zambia and China, but a potential loss for the dollar's dominance in the region. The United States president likely didn't anticipate this consequence. Policies aimed at protecting domestic industries, penalizing China, and tightening trade controls have had a side effect. Countries in Africa are now more willing to sidestep the dollar entirely. When trading in yuan, Zambia can bypass costly conversion fees and the fluctuations of a dollar tethered to United States economic policy. It's a subtle but powerful economic defiance. This move also has larger implications for Africa as a whole. Other nations with strong mineral exports, from copper in the Democratic Republic of Congo to oil in Nigeria, are closely watching Zambia's success. If the yuan becomes a preferred currency for African trade, it could signal a slow but steady decline in dollar dominance across the continent. African nations gain more leverage in negotiating trade deals and are less vulnerable to shifts in United States monetary policy. This is economic sovereignty in action, and it's happening quietly, but decisively. China, for its part, benefits immensely. By expanding yuan usage internationally, it not only strengthens its currency, but also deepens its influence in regions rich in raw materials. Strategic ports, railways, and mining investments in Africa are more than just infrastructure. They re a geopolitical network that positions China as a preferred partner over the United States. The yuan is no longer just a currency. It's a tool of influence, and Zambia is the latest example of its reach. The ripple effects for the United States are hard to ignore. Dollar reliance has long been a pillar of United States global influence, allowing the president and the Treasury to exert pressure, collect fees, and maintain economic leverage. As countries shift to alternative currencies, that influence diminishes. Tariffs, meant to protect the United States economy and penalize China, are unintentionally accelerating a trend that undercuts American clout abroad. For countries like Zambia, it's no longer about taking sides ideologically. It's about economic pragmatism. Zambia's decision is also sending a message to multinational corporations and investors. Firms that previously relied on dollar transactions may now need to adapt to yuan-based trade to remain competitive. For the global commodities market, this shift could mean fluctuations in pricing, hedging strategies, and even the valuation of copper and other African minerals. In essence, what started as a domestic move by Zambia could end up influencing how the entire world prices, trades, and invests in Africa. For ordinary Zambians, the move carries both risk and reward. While the switch to yuan offers stability in trade and potential investment in infrastructure, it also ties the economy closer to China. Political leaders are betting that the benefits, cheaper loans, predictable trade agreements, and long-term development projects outweigh the risks of dependency on a foreign power. It's a calculated gamble, but one that signals bold leadership in navigating the turbulent waters of global finance. In the end, Zambia's move is about more than currency. It's a wake-up call. The United States president's tariffs, intended to assert dominance, have inadvertently nudged African nations closer to China. The dollar, long seen as untouchable, is facing challenges in places once considered firmly under its influence. And China, ever strategic, is ready to fill the gap with investment, loans, and infrastructure that cement long-term partnerships. As Zambia quietly transitions to the yuan, the world is watching. African nations are reassessing their alliances, investors are recalibrating risks, and the balance of global economic power is subtly shifting. It's a reminder that in the global arena, policies have consequences, sometimes the exact opposite of what was intended. And in this unfolding story, Zambia has emerged as a pioneer, showing that pragmatic economic choices can rewrite the rules of trade, one currency at a time.